Hello everybody. Well, in this video, we will discuss the one of the past papers of advanced audit assurance, past paper question. Okay, so let us look at the requirement first. Okay, the requirement is asking to evaluate the quality management and other professional matters identified during a review in respect of the planning and performance of the Forysthia Group audit and recommend appropriate actions to be taken. Okay, it will provide us 20 marks. 20 marks, that means, for quality management and ethical areas, uh, we will get 1 mark per relevant point. Okay, so that means we need to write almost 20 valid points, paragraphs to get the marks. Okay, professional marks will be awarded for the demonstration of a skill in analysis and evaluation, professional skepticism and judgment, and commercial acumen in your answer. That means all of the professional skills have to be applied except for communication. So let us now look at the scenario. It is 1st July 2005. You are an audit manager in Magnolia and Company, and you are currently conducting an engagement quality review on the audit of Forysthia Group, the group which is a listed entity. So that means it is a listed entity. So it is essential, it is necessary to perform, you know, the engagement quality review because as per ISQM1, as ISQM1, it is necessary to perform EQR, engagement quality review on listed entities. Okay, your firm is appointed to audit the consolidated financial statements and the individual financial statements of all group companies. The following exhibit available below provides information relevant to the question. The one Forysthia Group summary of comments made by the audit team regarding the performance of the audit. This information should be used to answer the question requirement within the response option provided. The audit of Forysthia Group, the group for the year ended 31st March 2005, is in the completion stage and the auditor report is due to be issued next week. Okay. The group has diverse operations focusing on manufacturing, but is also involved with activities in some other areas, such as, the agriculture. Okay. The draft consolidated financial statements include revenue of 129 million in current year, and in 2004 it's 113 million. So that means that means how much is the change in the revenue? Well, 129 and 113. 129 minus 113. So 16 divided by 113, we get it's a 14.15% increase in revenue. Yeah, 14.15 increase in revenue. Profit before tax. Okay, profit before tax of 18.6 million, and previous year it was 23.2. Okay, so revenue increasing by actually 14.5. Now, the next is the profit before tax. Current year 18.6, previous year 23.2. So 18.6 minus, like 23.2 minus 18.6. So 4.6 is a difference divided by 23.2. So it is decreasing by 19.82%. So it's decreasing by 19.82%. Okay. And total assets of 465 million in the current year. Previous year it was 460. So how much it is increasing? Well, 5 divided by 460 into 100. 1.08%. That means, you know, it's material as well. 1.08%, increasing by 1.08%. You have discussed the group audit with the junior member of the audit team who made the following comments about it was planned and carried out. On 10 June 2005, the group acquired another subsidiary, Robin Company, which is forecast to increase the group total revenue by around 20%. This means the group chief finance officer had little time to discuss matters with the audit team. Okay, the acquisition has take place quickly and so did not form part of the audit planning, which took place in January. Okay, January 2005. The audit engagement partner said that we did not need to perform audit work on any aspect of the acquisition, as according to the CFO, it will all be accounted for in next year's financial statement. So here a bit the engagement partner is not correct over here because it as per ISA 560 it is a subsequent event. It is a subsequent event, right? And it's non-adjusting event. Therefore, we need to provide disclosure regarding it. Therefore, the work need to be performed. Due to pressure to reduce the cost of the audit, the audit manager arranged for the audit procedures on revenue recognized by several significant subsidiaries, including a subsidiary in the agriculture industry, to be delegated to Camellia Associate, an unconnected firm. Okay. The audit manager said that we can rely on the evidence obtained by the Camellia Associate as they are a firm of qualified accountant. Okay. But yeah, they can delegate, the work can be delegated to the firm, but it should be reviewed. But it should be reviewed. Okay. Now, I also audited the group intangible assets, which involve evaluating the assumptions relating to the appropriateness of capitalization of 1.2 million of development costs in the year, as you can see. Okay. I could not discuss this with CFO and no one else was available. So I agreed the assumptions. Okay, they have not challenged. They have not challenged any assumptions and they are agreed to it, for example, relating to the technical feasibility and commercial viability to the group business plan and concluded that they were consistent. This is the first year that development costs have been recognized as an intangible asset in the group financial statement. So nothing regarding it. It is also a problem here. Then we have, next paragraph. Your company, which operates in the agriculture industry, is a subsidiary of the group at the audit planning stage in line with the previous year audit. It was not identified as a component. Why so? Which need to be visited for audit to be performed. However, due to the specialist nature of the operations of the company, a consultant should have been used to provide input on some technical matters as stated in the audit strategy and an audit plan. Due to cost implications, the consultant was not agreed and the section of the audit strategy and the audit plan containing instructions relating to the consultant was deleted from the audit files. Following your conversation with the audit assistant, you reviewed the audit working papers and found the following. The audit evidence obtained by Camille Associate has not been reviewed by the auditing manager or partner. No further evidence has been obtained relating to the development expenditure. Your company has total assets of 60.5 in current year, which has decreased significantly. And in previous year, it was 83 million. So, and revenue of 6.5 million current year, and in previous year, it was 6.4 million. That was so significant, folks. Now, let us, we have looked at the scenario. We had made our points, as you can see. Right now, let us draft our answer regarding it. So, we have identified all the points. Now let us look at the answer. Let us draft the answer now. So our answer now, right? Let us look. Okay. Yeah. So what we will say as the Forysthia is a listed entity. It is appropriate that engagement quality review EQR is taking place. Okay, this is in accordance with the standard on quality management one ISQM1, which requires an EKR to be performed on the audit of listed entities. You do not need to mention the standard name in the questions. You can say that it is as per the relevant standard as well. If you do not remember the standard name. Now, the first issue which we had identified was acquisition of Robin Company. So, the acquisition of a subsidiary after the financial year end of the subsidiary after the financial year end should not be ignored by the audit team. Okay. This is a subsequent event. Subsequent event which, according to ISA 560, subsequent event. Okay. Remember, you do not need to write the standard number or name in the examination. You just need to provide the relevant knowledge related to it, right? So, uh, subsequent event need to be considered by the audit team. Okay, by the audit team because the event may need to be may need to be recognized or disclosed in group financial statements. Okay. Now we will connect this with the scenario. So what we will say in this case, the acquisition of a subsidiary after the year end, after the year end is significant non-adjusting event non-adjusting event, okay, in respect of which no adjustment is required, but disclosure should be made in the financial statements. No. So we have covered this. one issue right over here. Now, now we will tell about the issue related to the matter. Okay, so furthermore, what we will say that the audit engagement partner is therefore incorrect to agree with the CFO. Incorrect to agree with the CFO. Uh, as assertion that the matter will only be recognized in next year financial statement. Okay. So further, given that subsidiary is forecast to increase group revenue by 20%, it appears acquisition is material to the financial statement and audit procedures should be performed to determine and conclude on necessary disclosures. Okay. So furthermore, what we will say that we will say that the audit engagement partner Statement could indicate a concerning lack of knowledge or could be due to constraints on audit, encouraging them to cut back to cut back on necessary audit work. Next paragraph. Okay. ISA 220. Okay. That is quality management for an audit of financial statements, includes budget constraints as one of the key impediments to the exercise of professional skepticism. On an engagement due to this cause pressure, the audit partner could be failing to apply appropriate level of professional skepticism by agreeing with the CFO and failing to challenge this assertion. Okay, the audit engagement partner, the audit partner, I would say, could be failing to apply an appropriate level of professional skepticism by agreeing with CFO and failing to challenge assertion. One more part done. So far, so good. See how much we have written. We got 1 mark for this area, 1 mark for this paragraph, two, 1 mark for this paragraph, three, 1 mark paragraph, four, 1 mark for this paragraph, five, 1 mark for this paragraph, six, and 1 mark for this paragraph, seven. So far we have scored 7 marks. Now, furthermore, what we will say, the leadership team of Mongolia of Magnolia and company is responsible and accountable. And accountable for firm-wide audit quality. As it is an audit partner who is at fault here. This suggests potentially wider quality risks within the audit firm. So far, so good. Now, further, what we will say, yeah, we'll say that audit planning should be revisited as the audit progresses. The auditor shall update and change, update and change the overall audit strategy and the audit plan as necessary. as necessary. Okay, audit strategy and audit plan as necessary during the course of audit. Okay, this may be the case when information comes to the auditor's attention. Which differs significantly from the information available. Information available when the auditor planned the audit procedures. Okay. Now, further, what we'll say that giving the speed at which at which uh, the acquisition of Robin Company has occurred, it is understandable, why this acquisition was not known, at the time of planning, but the audit engagement partner should have reacted, should have reacted to the acquisition of Robin Company by modifying audit procedures. Okay, this should have been done. Then finally, in this regard, we can say that if the necessary disclosures are not made, are not made in this year financial statement, material misstatement would exist. Would exist with implications for the auditor's opinion on the group financial statement. Okay. Uh, with implications for the auditor opinion on the group financial statement. The issue should be discussed with group audit committee once relevant audit procedures have been performed, have been performed to determine the nature and extent of the disclosures to be made in the financial statements. So far, so good. Uh, so we have covered all the areas or the aspects related to the acquisition of Rob and Company. Now, next issue was related to the delegation of audit work to Camellia Associates. Okay, so far so good. Now, regarding this, let us discuss. It is not prohibited for the audit work to be delegated for audit work to be delegated to other audit firms. However, the evidence obtained should not just be accepted, should not just accept it without proper review and audit work of Camellia Associates cannot simply be relied upon as suggested by the audit manager. So, without proper review and and the audit work of Camellia Associates cannot be relied upon as suggested by audit manager. So the engagement partner shall determine through review of audit documentation, through review of uh, audit documentation and discussion. Through review of audit documentation. Okay. Engagement with partner shall determine through review of the audit documentation and discussion. Yeah. And discussion with the team, with engagement team. Okay. Team that sufficient appropriate audit evidence is obtained to support the conclusions reached to reach and to issue audit report, right? Now, so far so good. I hope. Okay, further, what we can say in this regard is that Camellia Associates is a firm of accountants. This does not necessarily mean it is a registered audit firm. And they may not be competent to conduct audit work. So it may not have experience of group audits, including specialized activities such as agriculture, which increase the level of concern over the quality of audit evidence produced. Okay, so far so good. Furthermore, we can say that the auditor's responsibility relating to fraud in an audit of financial statement requires the audit work to the auditor to work on the presumption on presumption that there are risk of fraud of fraud in revenue recognition. Therefore, the revenue is usually approached as a high risk of the audit. So, the delegation of audit work in respect of revenue is likely to be inappropriate. So far, so good. Now let us look at that how much we have written again so far. Right. So we got mark 2, 3, 4, 5, 6, 7. Then we got 8, 10, 11, 12. Okay. 13, 14, 15, 16, and 17. So we still have uh, you know 3 marks to cover. We will use separate heading, development expenditure. Now, so the accounting treatment of the capitalized development cost is also significant as this could indicate deliberate misapplication of the requirement of relevant financial reporting Reporting standard. In order to boost the profit, 'reported by group' during the year. As profit before tax has decreased by 20% on the prior year, the fact that this is the first year in which development cost is capitalized, increases the risk that accounting treatment is incorrect. Furthermore, what we'll say that so insufficient audit evidences has been obtained, has been obtained relating to capitalize development expenditure. Okay, confirming that set of management assumptions, assumptions, agree to the assumptions from another source does not provide evidence on the validity of assumptions themselves. Lastly, we will use the last heading of your company, okay, to get last of the marks. Based on the draft financial statement, your company represent 13% of group assets and 5% of group revenue. And based on prior year financial statement, your company represented 18% of group assets and 5.7% of revenue, the group revenue, okay, in previous year. So when considering which component should be visited, should be visited for work to be performed, the firm should consider the firm should consider events or condition that could give rise to risk of material misstatement, the size of component and components in which significant changes have taken place. Lastly, your company, despite its percentage contribution to the group this year, being less than the prior year. The reduction in assets of 27.1%, unusual and significant. So finally, we will give the so here is the conclusion now. So what's the conclusion? There are many concerns raised regarding management of engagement quality, at least on the engagement of Forysthia group, or it should be conducted according to ISA 220, which in this case not happened due to cost constraints, important elements of audit have not been followed. So far, so good, and that's it. Uh, for the answer, that's how you should draft the answer. See, read line by line, take out the points, and discuss that. Discuss the appropriate standard, the knowledge, connect it with the scenario, and then tell what's the problem. That's what I did. And overall solutions. There is, if if you have any questions, you can ask me via WhatsApp. Okay, that's